Hi everyone. Today I'd like to talk about the upside of market downturns. For prepared investors, market downturns can represent great opportunities. We have just experienced a major market downturn this year. Nearly everywhere you turn, friends, colleagues, cable news shows, you can hear someone with a strong opinion about the financial markets. People will often use the terms like correction or bear market to render judgments about the direction of the market, especially when the market performance is choppy or trending down. So, a great question to ask when you hear that is it worth getting concerned when the markets reverse course and turn down? Is it worth getting concerned when markets turn down? The answer is important to realize that downturns are not rare events. Typical investors in all markets endure many of these during their lifetime. So take a look at this chart. It tells an important story. Since 1980, there have been 20 corrections. A correction is defined as a decline of 10% or more. Since 1980, there have been 9 bear markets. And that's a decline of 20% or more. And they're at least 2 months long. So there have been 9 of those since 1980. And then since 1980, there have been 5 recessions. And a recession is defined as a decline in economic conditions for 2 or more successive quarters. Even knowing this, it can be unsettling to watch the decline of your portfolio during one of these events. After all, that account balance is more than a number. It represents very important personal goals, such as the ability to retire comfortably and to provide a quality education for your kids. When market conditions jeopardize these goals, you might feel compelled to do something. Sometimes people want to sell most or all of their investments. This assumption is that converting to cash will give you a better long-term result than staying invested. The question is that true? Such actions typically will shut you out of strong recoveries that typically follow market downturns. The best answer is to come up with a game plan before the next market pullback so that you're well positioned to take advantage of what happens in the next downturn. With a plan, you will know what to expect in the next cycle, and you can tune out the messages that don't help achieve your goals. The best defense is to making a plan and sticking to it. Stick to it. Develop a plan now that prepares you and your portfolio for financial system shocks whenever they happen, because they're going to happen. That means focusing on the factors that you can control. Those include things like asset allocation and costs, and not worrying about the things out of your control, like market downturns and downturns in the economy and the markets. Market conditions, swings are inevitable, but they don't last forever. As a savvy investor, you can endure those short-term pullbacks and remain committed to achieving your long-term vision. Downturns come and go. Results of a well-designed plan, on the other hand, can serve you the rest of your life. So thanks for stopping by. Thanks for listening to this message today. If you would, subscribe to the channel, hit the bell to hear about updated videos we're coming. Thank you so much for stopping in and listening to this message. I'll talk to you again soon. Bye for now.